Hello, traders. FX Pip Collector here. Today is Tuesday, October 7th, and I'm going to be covering the US dollar pairs, including gold, and we're going to take a look at a few of the JPY yen pairs. Also, though, don't forget to check out my website, fxpipcollector.com, if you'd like to get access to all the benefits listed below for only $30 per month. Before we get started, one of the routines that I am a big believer is you definitely want to check out the news calendar each day before the news comes out. Today we got this Euro CPI news coming out in a few minutes, which definitely probably is going to be affecting the Euro pairs. Later on, we have IMS PMI, service PMI. That is definitely something that will affect the US dollar pairs also. And we have job openings. So definitely check these news events out. You definitely want to be aware of when the news is, so that way you will not be surprised if the market makes a big impulsive move at one of these big news events. So anyways, starting off with the euro dollar, we're looking at the daily time frame. We're in a big downtrend, as you can see. One thing I think that everybody does need to note is that this is definitely a five-wave pattern to the downside. And if we actually switch over to some of these other dollar pairs, like the pound dollar, we have that same five waves down. The market really does like to move in five-wave and three-wave patterns. And if we look at pretty much all the dollar pairs, they pretty much all have that five-wave pattern to the downside. Very, very important thing to note. Now, we have not broken structure to the upside yet on the euro dollar. Definitely a very impulsive move up, as you can see, but no break of structure yet, meaning that the trend is definitely still down. And for me, the weekly trend is definitely down until we break the structure back here. So we have to be careful assuming that this is going to be a big giant push to the upside. More than likely, this is actually just going to end up being another correction to the downtrend, at least until we start getting some significant breaks of structure. We cannot assume that this move right here is going to be nothing beyond another three-wave pullback, kind of like this over here, one, two, three waves up, maybe one, two, three waves up, and then likely another push to the downside. Seems to me like it should end up being like a three, a four, and a wave five. Now, I spent a lot of time analyzing these higher time frames, and then I take my entries on like the 1 hour time frame. But 90% of my analysis is done on the higher roadmap timeframes to give me direction on the shorter timeframes. So anyways, going down to the 1 hour time frame, we still got our Fibonacci level on there that we had on yesterday. We got our Fibonacci on the last impulsive move down. One thing to keep in mind is that we are closing well above the 78%, and this move up right here to me definitely looks like a trend. More than likely, this is just part of a correction. If this does make a push down, it's probably not going to be the continuation of the downtrend, but more than likely just a wave B of a ABC correction like what I was drawing on the daily time frame. So if we do get this ABC shape, if we do get three waves up, and we get a nice impulsive engulfing move to the downside, that's exactly what I would be looking for my next big short for the continuation of the downtrend. Otherwise, if you do trade even shorter than the 1 hour time frame, you definitely could possibly be looking for longs at the end of pullbacks. So moving on to the pound dollar, I just showed you that the pound dollar does, in fact, have a pretty nice five-way pattern to the downside. Now, that doesn't mean that it has to break structure, but normally when you see five waves, you'll see a correction to that five waves. Maybe something like this. Some sort of an ABC correction to the last five waves down before you get another impulsive move to the downside. So, let's take it down to the 1 hour time frame. Just like the euro dollar, it is definitely very strong move to the upside, and this move up to me definitely looks more like a trend than a correction. It is also closing above the 78%, which is usually a pretty good sign that it will eventually go up and take out the previous high. Now, more than likely, it doesn't have to just go up and take out the high right now. More than likely, this is just a wave A. It may end up maybe this afternoon, New York session pushing down, but the move down probably will be a correction to this move up like a wave B. Then I think there's a good chance this is going to go up for a wave C. I do see an alternative count right here, which is that this could be the wave A, and this could be three waves down for the wave B, and this could be a wave C, and this is actually like a flat pattern. The pound dollar does love to make flat patterns, so that definitely is a possibility also. But for now, until we get like a big impulsive move to the downside, I think if you are trading on the very short time frames, you could be looking for longs. Otherwise, if you're more of a swing trader like I am, then you're looking for an opportunity to go short at the end of three-wave pullbacks, ABC corrections. So let's take it down to the Aussie dollar. Same, pretty much the same thing on the Aussie dollar. If you zoom out far enough, you can see that this really looks like one big giant correction to the last a big impulsive move up. So I still think eventually this is going to make a big move to the upside, but I don't think it's quite ready for that yet. So the Aussie dollar did definitely break structure yesterday, and it didn't really hold above structure, but it looks like today it is going back up and retesting it. Just like the other dollar pairs, we have a very clear five waves down, which means more than likely we are making a correction to the last five waves down. Also, I would look at this over here and say that that's definitely looks like a trend. I think this is a wave one. I think this is a wave two. I think this most recent five waves is a wave three. I think we're probably in an ABC of four, which will probably be about the same time on the time scale as the wave two, and eventually probably head back down again for a wave five. Then that will probably be the completion of this pattern, which I think will probably line up pretty well with the new president taking office on January 20th at the end of the month. So the Kiwi dollar is pretty much exactly the same as the Aussie dollar. I don't really cover it because it's exactly the same pattern. So moving on to the US dollar CAD. US dollar CAD is also making a pretty impulsive move to the downside. Now, one thing you really have to notice about the US dollar CAD is this most recent move up is three waves. This looks like impulsive. That looks like three waves. This looks like impulsive. Kind of makes you think that this is already a wave C and that this move down we're getting is likely just a correction to the last impulsive move up. And we are likely just going to keep on trending up. If you zoom out far enough on this US dollar CAD, you can also notice that we are well above the 78%. Normally, when price breaks the 78% of any given move, which if you zoom out far enough or go up to the weekly, we are beyond the 78% of the last impulsive move down. Normally, if you go below on the 78%, you will eventually end up going up and taking out the previous high. So even if this does go down more, I think that it more than likely will go up and retest this high before we actually do get the big push down, probably the end of this wave B, wave A, and eventually down for a wave C. So let's keep all this in mind because, like I said, the higher time frames are so important. I don't care if you're trading on the 1 minute time frame, the daily time frame is such an important analysis for everybody. So going down to the 1 hour time frame, just like I was saying yesterday, I think this is likely an A. I think this is likely a B. I think we could already be in a wave C. I'm watching my Fibonacci levels very closely. We had a nice impulsive move up yesterday, but we technically didn't have any breaks, so we couldn't really prove that the correction was over. What I would like to see is I would like to see either a double bottom and a impulsive move up and a break of structure, proving that the wave C is over and we're back into the uptrend. Or what would be even nicer is if it like made another double bottom and then another break of structure like that, proving that this correction was over and the continuation of the uptrend. Until we get that break of structure at a Fibonacci level, you probably could, if you do trade the very short time frames, be looking for shorts on shorter time frames. All right, moving on to the US dollar Swiss. The US dollar Swiss, I believe, is going to take out the wave four. There's a big five-wave pattern right here on the weekly time frame. I believe that if you're going to have a clutch into those five waves, which I think we are, then you should take out the high of wave four. I think this is either a wave A or a wave one. I kind of think it's a wave A, but it could be a wave one. Either way, the trading strategy is exactly the same for wave A and a wave one, which is looking for longs and sort of time frames. Also, a wave A and a wave one almost always take out the high of wave four before you get the wave B or the wave two. So yes, it is going down, but I think there's a good chance it will take out these highs before we get the bigger push to the downside for either a wave B or a wave 2. So let's keep going down to the 1 hour time frame. Check that out. So yes, we definitely did make a pretty impulsive move down, just like all the other pairs. But I think there's a good chance that this move down we're seeing is a correction to the last move up. Just like every one of these other moves right here, like that was a correction to this. This was a correction to this. This was a correction to this. Until we get a break of the high low series and we move to the downside, I'm looking at nothing beyond a correction to the last impulsive move to the upside. So we got our Fibonacci retracement on the last impulsive move to the upside. We are watching our fib levels very closely. If we get a break to the upside on the 1 hour time frame at a Fibonacci level, then that definitely would be an entry to go long for me, potentially for the continuation of the uptrend. So moving on to gold, I will look at the dollar yen, but I always consider the dollar yen more of a yen pair than a dollar pair. If we go up to like the weekly time frame on gold, I do think there's a good chance that the wave 3 is over on the weekly. If the wave 3 is over on the weekly, then we should make a pullback to the last impulsive move up, maybe something like this for a wave 4, and then eventually we should go up for a wave 5. Also, we need to note that this wave 4 will probably be around the same size on the time scale, not the price scale, but the time scale as this wave 2 over here. So that could give you a really good clue about how long you would expect this wave 4 to last. So anyways, taking it down to the daily time frame, I definitely see a few possibilities here on the daily. First of all, I definitely think this is a wave A. I think it looks like a possible A, B, C of B already, but I do see the possibility that this is still a wave B, like this is the A, this is a B, A of B, B of B, and this actually goes up for a C of B, sweeps all these highs, and then goes down for the bigger wave C of wave 4. That definitely looks possible to me. Now, the other scenario I have is that this is already 3 waves up, and this is like a wave 1, and this is a wave 2, and it's going to make a lower high and just continue the downtrend from here, and we're already in the 3, the 4, and the 5 of wave C. Both scenarios are definitely possible, so keep an eye out for both. That's very common in especially Elliott wave terms to have multiple scenarios. And I believe that you should have multiple scenarios so that way you're not surprised when something doesn't go the way you think it should go. So anyways, going down to a sort of time phase, like I said, if this right here is like a big wave 1, and this is actually supposed to be an A, this is supposed to be a B, and this is supposed to be a C, that means that this correction might be already over. This could be like a 1, 2, 3, 4, 5 of 1. This would be the end of a wave 2. So 1, 2, and then we're either in a 3 or a C. So 1 of 3. We got our Fibonacci level on this move down. 2 of C. Watch your Fibonacci levels very closely for a break to the downside, proving that the 2 is over. And then that would be the most likely the beginning of a 3 of C or the beginning of a 3 of 3. So keep an eye on your Fibonacci levels very closely. For me, Fibonacci analysis is extremely important. Now, if it goes up, bounces from a fib level, breaks structure, that would probably be the end of a correction. On the other hand, if it goes up, bounces, doesn't break, goes up, bounces, doesn't break, and just keeps on going up like that, then there would be no entry to go short because you had no Fibonacci bounce and a break of structure at a Fibonacci level. So if you pay attention to price, pay attention to your fib levels very closely, then you should not get trapped in a short unless it really is the end of a correction and it really is going to the short side. So anyways, moving on to the dollar yen, which I said I definitely consider the dollar yen more of a yen pair than a dollar pair. Now, yeah, the dollar yen is definitely going up right now. We cannot argue that the dollar yen is in a move to the upside. Until we get a break of this structure right here, I would definitely be looking for longs on sort of time frames. For me, the fact that it's closing above the 78% does kind of make me wonder if it might just keep on making these higher highs, higher lows, eventually going up and taking out these highs. I was thinking that this was a wave B, but it definitely doesn't have to be a wave B. It potentially could just keep going up. Now, how would you trade away B? You'd be looking for longs on shorter time frames. Now, how would you trade this move if it was actually if you knew it was actually just going to keep on going up? You would be looking for longs on shorter time frames. So whether it's a wave B or whether it's a continuation of the uptrend doesn't matter because we should be looking for longs on shorter time frames. It's exactly the same trading strategy. So going down to the 1 hour time frame, I'm definitely looking for longs. You could potentially just be trading all these little impulsive moves up right here, looking for longs at the end of every single one of these moves, and eventually, If it just takes off to the upside and just keeps on going, then that's great. So you're looking for longs on the shorter time frames. On the other hand, if it does go down, if it does break structure in a big way, we would stop looking for longs. We would have more confirmation that this is a way B, and we would start looking for shorts again. But if it never breaks structure, never tells us to start looking for shorts, then we're just going to continue to look for longs every single chance we get. Now, moving on to the euro again. I was talking about yesterday how more than likely this is going up, but it definitely could be the end of a wave B right here. This right here could be the end of a wave B because it definitely looks like 1, 2, 3 waves up. It looks like this could end up making a lower high compared to this high and then going down like that. So we definitely need to keep an eye on sort of time frames for this happening because that would be a really big move to the downside if that is the case. Now the trend based on structure, the trend is up. Based on market flow, the trend is up. So we should definitely be looking for longs on sort of time frames currently. And if it does turn back to the downside, we should better recognize that. We'll stop looking for longs and we'll start looking for shorts again. Now, yesterday I was talking about how I got my Fibonacci retracement on here, but more than likely this is just going to keep on going up and taking out these highs, and that pretty much is what happened. This 78% was an area of resistance, as you can see. It did pull back right there, but it never made it break a structure. It made another higher low, another higher low, another higher low, another higher low. No break of structure at a Fibonacci level told me to not enter short, but instead either hold on to logs or continue to look for logs at the end of every single pullback we see. So moving on to the pound yen, pretty much exactly the same story as the euro yen. Just like the euro yen, this right here actually could be the top of a wave B. This definitely could be a 1, 2, 3 of B. This could be the A. If that is true, then this move up right here will probably just go up, retest these highs, make a lower high, and then continue down. But there's also a possibility that it goes up and takes out these highs and maybe even goes a little bit further before it goes down. Either way, we should be looking for longs on sort of time frames until we do get a big and significant turn to the downside, which we definitely do not have yet. So just like the euro again, yesterday I was talking about how we got our Fibonacci retracement on this last impulsive move down, but more than likely this is just going to continue the uptrend. Now we did have some resistance at these fib levels. We did have a pretty big bounce at a fib level, but there was no break of structure. It tried to break structure, but it definitely didn't hold. And then it made a higher low, it made a higher low, and it's still moving up. I think at this point, more than likely, this is an ABC correction right here. That more than likely it is going to end up going up and sweeping these highs before it potentially even thinks about moving down. So the trend is still up. The market is still moving up. It's still making higher highs, higher lows, higher time frame roadmap time frames. The higher roadmap time frames are definitely telling us to continue to look for longs. So I definitely would continue to look for longs at the end of any single pullback I see on these sort of time frames. I would much prefer to wait for proper pullbacks, 1, 2, 3 patterns like this, 1, 2, 3 like that, 1, 2, 3 like this, 1, 2, 3 like that, 1, 2, 3 like this. I'm not looking to get in some little teeny correction like this, but instead I'm looking to wait for a proper three-way pullback to get in for the continuation of potentially this uptrend on the higher time frames. So as far as all these other pairs, I don't really cover them, but in my members only live streams that I do 4 days a week, Tuesday through Friday, we cover every single thing on this list. We do a full top-down analysis on everything. We look for entries on everything. We look for possible upcoming setups on everything. So like I said, if you are interested in joining my membership, it is only $30 a month. I do share every single trade I take with the members at the time of entry. And we also do live Zoom meetings where we put our heads together and try to figure out where all these patterns are on all these other major Forex pairs. So if you're interested in that, definitely check out my website, fxpipcollector.com. And anyways, as always, thank you for watching and happy trading.